morning, ladies and gentlemen, and welcome to FOMC Wednesday. The day is here. Looking here at the futures, and they are dead flat with the low of the night at 60.56, the high of the night at 60.80, and none of it matters because it is FOMC day. And as I've said, with the previous FOMC day having been one of the greatest events of all time, almost equal to a pleasant version of losing your virginity, $75, $12,490 in 3 hours. This is not a holy shit, I can microwave my wealth kind of day. If you overexpose yourself and it doesn't work, you are an idiot.
Okay, sir, this one says, now that the retards are out of the White House, everyone can say retard again, with pride.
Why don't we get that down so they can get them going, right?
So keep that in mind. We do these FOMCs 8 times a year. Today is the first. We get another one in March, April, June, July, September, October, and the last one in December. And I will quickly roll over here for you. And congratulations yesterday on both of you, those who trusted me with the 6,005, 6010 bullish put credit spread, full credit, $3, about the best you could get on that as you had that little dip early in the morning. And for those that stayed awake through that go to bed, rock you bye baby, fucking lazy grind up to 60.75. Sorry we didn't get 60.75. We only got 60.74.54. But yeah, you're 60.80, 60.75. The three of you that messaged me when I woke up this morning and saw it. Not bad, man. Getting $1.50 credit on that. So again, FOMC days, as I've shared with you. We have had sub 40 point range days, and they have absolutely sucked. November, perfect example. Donald Trump wins the election. The very next day, FOMC meeting. You saw the clip on Jerome Powell.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Nothing. A fucking nothing burger. Nothing. So again, these FOMC days are absolutely fantastic. They're gorgeous. They're wild, and we expect a little bit today because of the, I wouldn't say tension, but you know, you've just got that little bit going on there with Trump and Powell right now, and bigger, broader, wider picture is kind of still what I want to focus on here. So I'll bring you over here to yesterday. Like I said, we have we already got 2 red closes. We really need a green close today, or we risk having a complete shit FOMC day where we will virtually be forced to close green on Wednesday today, because we have had 3 consecutive red closes. Don't know what I'm saying? Go over and look at your chart. It's an algorithm, the same as the algorithm that played yesterday. I expected a few hours ago 60-30, 60-35 zone, and since we're here and the range has been a minimum 30 points over the past few days, I would now shift to not being surprised to see 60-50, 60-75 with the CCS alarm screaming at 60-75, filling the 6101 gap. I'll still leave for tomorrow, being today, as I said there prior to the open on Monday. Tie me to a chair, pour gas on me. I say they buy this dip into 2 o'clock Wednesday. The problem is all those AI names, and the problem still is those AI names. And like I said on the QQQ, 521 is the big pivot above, so a 4-point move from here would suffice to get SPX pushing into that 60-50, 60-75. Then here we are on the VIX. If you've ever seen the painting of Icarus, blah, 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 blah. Now all eyes concentrate on 60-20-22, 16-22. I don't see them giving up 16-22 ahead of Powell. Dia, IWM, blah, blah, blah. But again, Your trade yesterday, 6,005, 6,010s. Prior to the open, well prior to the open, $2, $2.50. You got $3 there intraday, and here we are flat. So let's get on to this. Again, it is Jerome Powell versus Donald Trump.
Delete this shit.
This is an old one that I have, and God, is it fantastic, because he really was his bitch when Donald Trump was in office. If you remember the drop of 2018, it was the PPT, Plunge Protection Team, and Donald Trump's pressure that got Jerome Powell to start cutting rates at the very beginning of 2019, which gave us that surge from 2,300 up to 3,300 just prior to COVID. Donald Trump could come in and sign an executive order to cut rates. Not that he can, he's not legally able to, but he has been doing a lot of executive orders as of recent.
And lastly, sir, we have an executive order demanding that grown men stop wearing skinny jeans.
That's a big one, huh? A lot of people are waiting for this for years, for decades.
So again, if you're one of those big kahunas, you want to be looking at a $5 to $100 trade, you want to have $500 ready to throw immediately. And I'm not saying that we're a bunch of pikers, but it's more than sufficient for an FOMC day, as you have just seen. $75 up to $12,490. Granted, it was a one-time deal, but still, you're looking at getting anywhere from 500 to 2,000% typically on an FOMC day. Good, little guys. Make America great again. Keep that $100 ready. Don't fuck yourself up. Credit spreads, I'm not going to have one today because it's FOMC day and you got a lot better trade over on your single leg calls and puts than you do on your credit spreads, even though we have done them before. And yes, because there's people that don't know how to wear two hats, I will go ahead and throw a credit spread out after 2:30. But again, the bigger, broader, wider picture is it doesn't matter what happens today, because after the close, we have Tesla, we have Meta, we have Microsoft, we have Apple, we still have Google and Amazon, and we still have AMD, not that that's big anymore, and NVIDIA that are going to be reporting earnings in the coming weeks. So today, absolutely, FOMC, that's the only thing that matters. But your bigger, broader, wider picture hasn't really changed yet. And that's what I'm going to try and shed a little bit of light on you with here. So let me get over onto chart system number 1. And what you're looking at here is your FOMC December 18th. And as I gave you your prep for FOMC yesterday, you can go back and refer to it. Go sit on the toilet, take a shit, and view through it. Do whatever you want. Nothing, 60, 70, 67 being the high of the day, right around 11 o'clock in the morning. Nothing. And 2 p.m., right when the FOMC decision was released, the December 18th FOMC candle is 60, 61, 54. You see the result coming after that. I will bring you on to yesterday. Opening up, a little bit of a gap up, back down to fill that gap, and this being the gap that was unfilled, it has now almost completely been filled. 6074.54, 54, not 24. And your gap above, bringing you out here to a little bit of a wider version, is now 6101. 60.75. That's your gap. And that, I would not bet anything significant that gap does not get filled during the course of today and even after 2 o'clock. I would leave that with a whole lot of respect that it is very, very, very likely that you are going to see that gap get filled. So I'll leave it at that, and that's all that I'm doing as far as that goes. On to your wider version, again, having a lot of respect for what has been taking place. we cannot rule out that drop coming out there from December down here into the, what is this, the January 13th, exactly the date low, is the bullish wave 4 bottom. This move to the upside being the 1, and the dip that we got with the big gap down there because of DeepSeek is the bullish wave 2. That being the case, should it be, as I have shared prior, there is a small window that we could be pushing up there into that 60-30 range. There is a small window that we could be pushing up there. And from where we are, and this wave having been, 57, 5,800, 6,100, 300 plus points, 325 plus points, this move off of the lows here at 59.70, this would have to be more than 300 points. So it would be pushing up here into the 6,300s. 63, 64, 63.32, 63.35. That's what a lot of people are talking about. The respect has to be given until it is proven that it has not. That's the way that it is. So it's on the table, and you have that big, broad picture that you have all of your big earnings that are still coming out after this FOMC meeting. Come on to the new moon, and as confident that 61.28 was the new moon could very easily be that low that we placed there on Monday. So with that window of the new moon being open all the way until Friday, on Monday, it's open until Monday of next week, cannot rule it out that there is a possibility that we could be making a move upward through this. Come on to your IWM. Your IWM is fucking strangled. It's locked in a closet. 227, 225, 227, 225. The 230 gifts, FOMC meetings, the only way that you're going to be looking at that. But again, wide view over on the IWM, fucking even wider than this. 180, 30, 60. Yeah, you're 227, 227, 227. And now here you are just bumping around that old 230, and you got nothing. You really do have nothing taking place on the IWM of any kind of indication whatsoever. QQQ, again, big thing. The big gap, big drop down there below that 504. And here we are pushing to 521 with the gap filling. Where is that? 529, 529, 528, somewhere up in that region. And you've got your big pivot up there at that 528.61. So the move up to 521 yesterday, nice initial move. Now we're looking at all of those big tech earnings that are going to be coming out after the market closes today, after Thursday market closes with Apple, and then still a little bit of influence next week with Google and Amazon reporting. Dow Jones, really nothing, extended. And here you are again with your VIX. Icarus flies up there, gets his wings burned, comes back down to earth. Where does he come back down to earth? Come on, Tim. 1622. Holding. So this is going to be a major indicator come 2 o'clock today. 1622. Still got your big gap to be filled down there. And like I said, there are no guarantees any way, shape, or form as to which way this is undoubtedly going to be going, as we had last year or last month in December at the last meeting. So to give you a little bit more of a broader view of all this, this is your SPX coming off of your Israel invades Gaza bottom, October 27, 2023, which, like I've shared with a lot of you, coincidentally touches exactly where your Russia invades Ukraine bottom from February 2022. I can see this here as 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. I know how obnoxious it is when your kids count and you're like, fucking come on, get on with it. Just get to the last number. But I see 21 waves from that October bottom. This is a visualization look. I could miss a wave, but this is your Fibonacci number, 21. 21 is a Fibonacci number. So, once again, there is a little bit of weight that is starting to lean on that this is good. Look at your daily, as far as your daily RSI goes. And we haven't been overbought since back here in July. And we're just getting weaker highs, technically failing here around the 80 mark, but we are making that recovery. And obviously, this big, humongous oversold that we had with the buy divergence going into that bottom there in January. But I bring you here then, wrong way, I bring you on to the weekly, all right? And again, this being the reason why I'm discussing about the 3 green weeks in a row, which I'll get to in a second. We are in a green week. Even though we are below last week's close, we have not filled that 6101 gap. This is a green week. We are above where we opened on the week. We had 3 just back here. When was this? Yeah, because I never marked this down. We had 3 right here just going back into the early part of December. Let me duplicate this and get it on there. Text note. Right there, we had 3. We had 6 over here coming off the September 11th bottom. 4 going into that off of the August bottom. Here's another 6. So there's no rule that says that we are not allowed to have a 3rd green week in a row. It's just one of those things that you pay very close attention to because you know there is ample opportunity on those failures when you only have 2 in a row and you already have a downward move in this move that we have taken place. So all we're doing is paying attention to it, knowing that the weekly candle is way, way down there at 59.70. Come on to your NDX, and again on the NDX, giving this all the respect that can possibly be given, this still looks as if we are looking at that October 2023 being the wave 2 bottom, the wave 3 having succumbed above the 100 extension being here in July, your massive 17% drop over here for your wave 4 in August. And I see this still as a 1, 2, 3, 4. So this could, again, on the NASDAQ, on the NDX, we could push a fractional little bit higher for a new all-time high still, up above that 22,133.22. I love that number. It's almost like a secret code, which coincidentally ties right in with your 200 extension off of COVID, ties right into your 200 extension off of your bounce from your drop over here back in November. So it again, it's possible. But then when you come and bring yourself into a technical view and you look at this from a weekly point of view, you are getting fucking slaughtered as far as this sell divergence goes. And this sell divergence on the weekly has been running way over here ever since July. Ever since July, we've been running this sell divergence on the weekly. The weekly's a big time frame. It's not a 1 minute. It's not a 5 minute. Day traders doesn't mean a fucking thing to you. But the bigger, broader, wider view of everything and how this is like putting a 469-pound female rapper into your Uber or your Lyft and saying, no, my wheels can't handle your big fat ass. That's what this is. This is that. And NVIDIA gave you a nice example as to how bad that could work out. Over onto the daily, I haven't updated my weekly candle count over on the NDX, but again, on your daily, we got overbought way back here in June, and there's been nothing on your weekly. Your weekly has just been weakening and weakening more and more, and we are looking again, like I shared for you, at 3 green weeks in a row right here. So FOMC is going to be at 2 o'clock. Be ready at 1 o'clock. You have your prep. And although this is kind of boring to leave up there, again, after the FOMC, It's not over. You got Tesla, Meta, Microsoft. Meta, I see it being topped. Tesla, I see it being topped. Microsoft hasn't moved anywhere in the better part of 6 months. And then you've got Apple coming up here on Thursday after the close. So see you guys around 1 o'clock in the chat room. Enjoy yourselves. Enjoy your morning. And again, if you have to work and you can't get out of it and you want to trade the FOMC.
Do you not want to be at work today? Just shit your pants. Shit your pants. What are they going to do? What are they going to do? You just shit yourself. Shit your pants. And then go home. And have a good day off. That's what I would do.